Good morning, all. It's Wednesday. It's the FOMC meeting where the Federal Reserve decides the level of US interest rates. 2 weeks ago, we were looking at a 50 basis point rise after Chairman Powell's testimony explaining that interest rates needed to stay higher for longer to fight inflation. Now, after the banking crisis and several US banks going bankrupt, we are looking at a situation where the Federal Reserve has to very, very carefully balance the fight against inflation with not completely destroying the banking system. And it looks like they're going to opt for 25 basis points if the consensus is to be believed. That will probably still put some of the banks under some stress. But as bond yields have fallen significantly as a result of the banking stress, these banks are under less pressure because, of course, they're facing less losses on their long bond positions. The market will be looking for a signal from the Fed as to how serious the situation is with the banks. Of course, the big question is now, how loyal will depositors be to the banks? If depositors worry and think that their savings are better off in one of the big banks, which are probably too big to fail and more likely to get bailed out, which is personally exactly what I'd be doing, making sure my money is in the safest place possible, because who trusts the Federal Reserve? Who trusts the banks? Nobody. Now, if the Federal Reserve only does not raise rates, leaves them unchanged, I think that could even spook the markets, because the market is going to wonder, what does the Fed know that we don't know? Why they're not raising interest rates when inflation is 6% and interest rates are only 4.5%? That is not a strategy that could fight inflation effectively. So the statement afterwards will also be very carefully dissected. We are walking on very thin ice as far as the banking crisis is concerned and the outlook for inflation. Janet Yellen yesterday trying to reassure the markets, saying that the banking system is safe. But come on, who believes that rubbish? You know, we've heard this year after year, and we keep having these crises. They keep getting worse. The numbers keep getting bigger and bigger because, of course, we're in a huge bubble. Okay, let's crack on with the charts. Yesterday, we were looking at a potential head and shoulders pattern for gold on the short-term chart, and that worked out really nicely. So for those of you who are not familiar with the head and shoulders pattern, this is the left shoulder. This is the head. This is potentially the right shoulder forming. We didn't know it was going to form. And then you join the base of the neck, which is the low of either shoulder. That gives you the neckline, which was down here at 63.1960. Break below 1960 was the sell signal because it indicates that the head and shoulder pattern has formed. It's confirmed. And then you have a measured target from the neckline up to the head. Now that was from 1962 up to 2009. So I'm going to call that 47 points. That should, in theory, take us down to around 1915, which is just above the 50% fib, or this little 78.2% fib. Now, that is the measured target. But for me yesterday, enough was done around the 1935, 1930 area. It was a good fib level, just below the 100-hour moving average. And we did indeed hit that target. What a beauty. The support level did hold really well, actually. If you tried a long, it looked promising, but we never really saw a profit on the long position at that support level. So you had to be really nimble and move quickly into a short position on the break. And it was a very convincing break on the hourly chart. So shorts on a break below that level worked really well. We went straight to 1935 for profit taking, and we're seeing a small recovery at the moment. Silver, the rising wedge pattern, I thought was negative. Also testing the 500 period moving average on the 4-hour chart. So it did look like we could break lower. And obviously I was expecting that gold could also break lower. So that was interesting. But silver wasn't quite so kind. Once we broke below that trend line and at the 23.6% fib, it looked like we should collapse, and we should have at least got to 2210, 2200. That was my first target and support level. But it was the 100-hour moving average that ended up holding it. And we're bouncing now. Now, I wonder if we can get back up to the 2260, 2270 area in silver, maybe put in a double top. Watch for a negative candle on the hourly chart or the 4-hour chart. If we retest that area to indicate a double top, and then we could start plunging back to 2210, 2200, and a break below 2200 would be another sell signal for silver. Of course, today's movements in precious metals and dollar pairs and also stock indices are probably going to be dominated by the FOMC decision on interest rates. I had a negative outlook for dollar yen, and I really did think that we would find strong resistance at the 132.30 area. But the dollar yen has been pushing up above that area now. So as long as we hold above 132.30, 132.20 area, we could see a further recovery. And 133.30 looks like a reasonable target. WTI crude worked really well. We hit the buy level, bounced off it perfectly. 68.5, the first target, and a minor resistance level. And I said if we push up through there, we can then see further gains and further profits for our longs. that level of 65.50, 65.40. We're now up through that 68.25, 68.75 area and looking good. I wonder if we pull back from here, whether we will get an inverse head and shoulders pattern, but I'm jumping the gun here. There's no indication of that forming at the moment. I'll certainly be keeping my eye on it. Last one, I've been talking about this megaphone pattern developing in the euro US dollar as we trade sideways. We tested the upper trend line and we reversed. So shorts at the level on our trade sheet yesterday, starting to work. I've got support levels on the trade sheet today. Okay, that's it for me for today. Good luck if you're trading over the FOMC meeting. Be very careful. Keep your stops in. I've no idea how the market's going to react, but we can chat again tomorrow and look into the developments.